Today our webinar is on reverse mortgages. My name is Jennifer Young and I am joined today with Don Taylor.
Good afternoon.
Oh, that's right, it's afternoon. And we're going to talk to you just a little bit about reverse mortgages. Just a few housekeeping items. If you have any questions, type them in on your questions tab. It's really helpful for us. This is more of a conversation. We're presenting information, but if you do have questions, we want to address those and answer those. And then just a reminder, at the end of the webinar, we will forward you in your email, we'll forward you a copy of this recorded webinar so that you can go back and reference this from time to time if you need. And we're going to go ahead and jump right in and address some common myths and misconceptions about reverse mortgages.
You know, reverse mortgages is a great product. There's been a lot of conversation. You know, it's not that old of a mortgage. It's maybe 10 or 15 years old. But there's some myths, there's misconceptions about, you know, do I have to give up my home? What happens, you know, with income? So we're going to just go through a few of the questions that come up. And the first one is a reverse mortgage. Does the reverse mortgage, do I have to sell my home to the bank to get a reverse mortgage? And the answer to that is no. You maintain ownership of the home. You're on title. It's just like another mortgage that you take out, a common mortgage where there's a trust deed filed against the home as a lien, and once that's satisfied, you have full control of the home. You have full control of the home to sell it, to even refinance out of the home or the reverse mortgage, but you do not turn you do not give up ownership of your home. That is your home. The second misconception, my heirs won't inherit anything. That's also false. In a reverse mortgage, you can only access a certain portion of your equity. And the rest of it stays with the home, stays with you, and also is available to your heirs if for some reason you were to pass away. And your estate gets the equity, and after you sell the home, you pay off the reverse mortgage. In this example, the reverse mortgage, say, is $50,000. You sell the home for $250,000. That, you know, after expenses, you're going to get somewhere around $200,000 in equity. That is yours to divide amongst your heirs, or to sell it and to buy another home maybe. The other misconception is, are homeowners forced out of your home? No, you're not. As long as you maintain that home as your primary residence, you can live in that home your entire life, and you're not forced out. The beautiful thing about a reverse mortgage, again, the idea is you do not make a payment on it, that the mortgage balance does increase because it accrues interest. There is an interest rate involved. And once that reverse mortgage is satisfied, or, you know, upon your demise, you know, you can sell the home, but you can live to 130 and not be kicked out of your home. They cannot force you out. The fourth one, can someone outlive a reverse mortgage? And I guess answered that question.
That was a good one.
No, you do not. Typically, a husband and wife team, if you're both on the reverse mortgage, if one dies and it leaves the remaining spouse in the home, no one can touch that spouse as well. The home is available to you as long as both lenders are living in the home. That kind of solves the reverse mortgage questions. Other misconceptions, the homeowner pays income taxes on the reverse mortgage funds. No, that's also false. This is not taxable income to you. You can use those funds in any way that you perceive, that you see fit. We'll talk about that a little bit later, but it does not increase your taxable income, and you do not have to pay income tax on those funds that you receive. The fifth one, Social Security and Medicare will be affected. That's also false. This is not taxable income again, so it does not affect your Social Security benefits or Medicare benefits. Again, contact your local attorney or your CPA, but it does not affect anything that you receive through Social Security. And then the last misconception we kind of want to deal with, are there large out-of-pocket expenses? And again, false. There are closing costs on this mortgage as well. There are on any mortgage. And generally what we try and do is make those, or take those closing costs out of the proceeds of the mortgage, so you do not come up with large out-of-pocket expenses.
Okay. I really love the part on this where it talks about, do you have to pay income taxes on that? And I think that's worth at least visiting again just a little bit. The thing that's nice about this reverse mortgage is you're using an asset that you have, that you've worked hard to gain, and you're putting it to work for you. And so you're not taxed on that. You don't have to pay the income taxes, and it's not going to affect your other income. So I think that's a really good thing to just as a reminder. A couple of questions have popped up. What are the interest rates on reverse mortgages? Do you want to address?
You know, they're comparable to current mortgage interest rates. I would say in the fours. Interest rate kind of depends. There's a fixed rate reverse mortgage. There's variable rate interest rates on a reverse mortgage. Kind of depends on the program. The best way to find out more information is give us a call. We can get a scenario for that. Every time we can give you a scenario of several different interest rates kind of compared to closing costs, just like a reverse mortgage. But I would say they're in the low 4 range right now is a good place to start on a reverse mortgage.
Yeah. They're very personalized, and so it could be anywhere from, you know, the low 4s to the high 4s. It depends on the scenario. It depends on the loan to value. It depends on how old you are. I mean, all of those things play into it. So, and then there was another let's see, there was another question that I wanted to make sure in. Oh, does it matter what they use the money for?
No.
Okay, and we'll probably address a little bit more of that later, but I just want to make sure that
The quick answer is no. You can use these funds any way you choose.
Okay. So a reverse mortgage, we kind of dove right in there and started answering myths and misconceptions, but I wanted to just address with you what a reverse mortgage is. So just as you would do a traditional mortgage, the traditional mortgage starts with a big balance and you pay it down over the time to get to a zero. A reverse mortgage works the opposite. It starts with a smaller balance and then accrues and grows over time to a larger balance. It actually enables you to withdraw that equity and live off of that, or to utilize it whatever way you want. And the benefit of that is you never make mortgage payments on it. You have to still pay your taxes and your insurance and your HOA if you live in an HOA. But as long as you keep those things current, you don't have to worry about making the mortgage payment. You're essentially utilizing that equity to either live off of it or do whatever you want with the equity of your home without having to pay the payments. This loan is insured by FHA. FHA is the Federal Housing Authority, and yes, it is insured by them. That's when we reference FHA and HUD, those are all kind of one and the same. HUD, the Housing Urban Development, and Federal Housing Administration, those two are kind of tied together, and they are the ones that set the requirements and insure this type of a product. And so it's a great loan. It allows you, again, to utilize that equity that you've worked so hard and not have to worry about the payment of the home, or the mortgage payment. So hopefully that helps you understand a little bit more about what the reverse mortgage is.
Do we want to answer some of these other questions that have come up right now?
I think we should.
You know, the interest rate on a fixed rate, again, that's a little bit subjective. I would, fair say, mid 4s. The difference between a variable and a fixed rate is if you are drawing money, if you have a line of credit. If you have a line of credit, it has to be a variable interest rate. The only time it's a fixed rate is if you say you have a $200,000 mortgage and you want to pay that off, you get a $200,000 reverse mortgage. You can fix that and it will stay fixed. But again, it's going to be in the mid 4 range at this point, but it does change until you lock that rate in. And then is there a yearly maintenance fee? No. There are fees up front, but once you are into the loan, there is no annual fees. You do have to continue to pay your property taxes and insurance, but as far as the loan is concerned, there are no additional maintenance fee for the reverse mortgage.
And that's a really good question. That's a really good question. Thanks for bringing that up.
And then can the loan be called in? Again, no. There is a proviso. If you move out of the home, the home, you have to have it as your primary residence. So if you move, say a person has to go into a care center, it can be called, but as long as you're in the home, stay in the home, and it is your primary residence, it cannot be called in.
So I'm assuming too, part of that question, Rhonda, would be if the economy tanks. So if things just go belly up and the value of the home bottoms out, can they do a call on the loan? And the answer is no. Regardless of what the economy does, regardless if it goes up or it goes down, these loans are insured by the government. So they're insured by FHA and HUD. You're good. It doesn't matter regardless of the value. So if the value goes up or the value goes down, it doesn't impact your mortgage.
We may address more information about
Yeah,
that
and
a little bit
we'll
further.
talk a little bit more about
Because
that.
that is an important part of the reverse mortgage benefits.
Yeah. So are we on who qualifies?
Who qualifies?
Did you cover that?
Not yet.
Okay.
So a person has to be 62 years of age to be on a reverse mortgage. It's if a husband and wife are on title to the home, it's not mandatory, but whoever's on the loan has to be 62 years old. If the husband is 62 and the wife is 58, the wife cannot be on the reverse mortgage until she turns 62. So it's good to have both borrowers or both people on the home to be 62. And there's good reasons for that. If one were to pass away down the road, the other one is on the loan and cannot be kicked out of the home or foreclosed on or started the foreclosure proceedings or force you to sell the home at some point. So you have to be 62 years of age. It has to be your primary residence, and you have to live in it. One of the conditions is that if you're gone from the home for more than 6 months, there are some issues with that, and that's the time that they may call the loan due, is if you're out of the home and not living in the home. You can't rent it out. You can't have your siblings live in it or your children. It has to be your primary residence. And the home must meet FHA appraisals guidelines and standards. Older homes, as long as they've been updated, but new homes, so they're FHA standards. And the FHA standards are generally safety-related issues. Can't have bare wires hanging out. They can't be old. Homes, railings, proper staircases, paint chips, and different things. Those are the kind of guidelines that the appraiser is going to watch out for. Excuse me. Since the borrower does not make a monthly mortgage payment, there is no income or credit review, or there is
just a
normal credit review to do that. So you don't have to have perfect credit. Credit scores really don't matter in this, but they do want to make sure that you have additional income to be able to pay your taxes and your insurance on the home and to live comfortably with other expenses that you may have.
So one question that came up was, does it matter what other debts are in places to qualify? Does it?
Excuse me. No, you can, in fact, refinance the mortgage. You can put a car loan in there. You can pay off you consolidate debt into the reverse mortgage as long as there is enough equity in the home to be able to do so.
Okay, it's a good question. Okay, so is it safe? So a reverse mortgage, just like we said, is just like any other mortgage. There's a lien placed on your property. You retain ownership. You can refinance the home. You can sell it. You can do anything you want. So as far as that goes, it's typical of any other mortgage. Paying off a traditional mortgage with a reverse mortgage, what we're talking about here, where we're talking about secures the home and can help mitigate the risk of foreclosure that may occur on a traditional mortgage due to an inability to make monthly mortgage payments. What we're talking about here is there are many times that we've talked to our members that have come in and said, we're retired, our income is fixed, and we still have a balance on our mortgage and we're struggling on a monthly basis. And we need to help find a way to reduce our monthly amounts. Can you help us? And this is one option. This is what we feel like is a really good option that can help with your monthly amounts. If you qualify for a reverse mortgage, it can, and we're going to show you a couple of scenarios later on in the presentation where we've actually worked with actual members and how it impacted their overall monthly situation. So yes, a reverse mortgage may not be for everybody, but it is a great tool to have at your use. If you qualify and if you need something like this, we've got it here. We can help you through and kind of answer the questions. So yes, it's totally safe. It's insured. We've already addressed the insurance on it. It's insured. So once you get into it, It's just like any other mortgage. You can treat it the same, pay it off, or except you don't have monthly payments, which is a nice benefit. So Dawn's going to address some of the additional benefits of reverse mortgages.
So benefits. A homeowner can stay in their home without making any future mortgage payments for the rest of their life. So typically a mortgage payment is anywhere from $1,000 maybe to $2,500 a month. That savings can really help or go towards other things. Now the offset to that is, of course, the reverse mortgage balance is going to increase. That interest rate accrues and it increases the balance on the reverse mortgage. So when the home is sold, or you can even refinance it, but typically when the home is sold, as long as you pay off the outstanding balance, and the reverse mortgage company is going to keep you up to date, I think, on an annual basis of what the balances are and what you owe and what's been accrued throughout the year. So that's going to increase. But as long as you're in the home, you can live mortgage free, other than paying your taxes and your insurance on the home. That needs to be continued. A reverse mortgage does not pay those for you. You have to do that yourself. Unlike a traditional mortgage, a credit score does not qualify you for a mortgage. So again, poor credit, if you struggle with your payments and you've missed a few payments or late on mortgage payments, it's hard to get a traditional mortgage. But on a reverse mortgage, that doesn't matter. The important things for a reverse mortgage qualification are your age and the amount of equity you have in your home. The third one, it can prevent future foreclosure. So if people, as they get older, they run out of savings, they run out of the 401k money, or the pension stops for some reason, and all that you're left with is Social Security. And that sometimes is a cut in your income. So that can help you stay in your home for as long as you would like. The fourth or the fifth, access to needed funds. If you need to replace a roof, repair HVA system, replace certain things in your home, update your home, you can do that through a line of credit, again, pending the amount of equity you have on the reverse mortgage. Most all properties qualify. So if you live in a condominium, a townhome, a single family home, those are all eligible to do a reverse mortgage on. The future value of your home is inconsequential, and that may be an answer to the question if the economy tanks. Say you, at the end, your reverse mortgage has a balance of $200,000, but your home is only worth $180,000. Your heirs, you do not have to, or if you pass on and you sell the home and the bank takes over the home at that point, you can just turn it over to the bank and no one is responsible for any deficit in that. So if the values of your home tank like it did in 2008, you do not have to come up with it, or your heirs do not have to come with it. Again, on the reverse side, if your home escalates in value and you have quite a bit because you're in it maybe 20 years down the road, instead of it appraising for $300,000, now it appraises for $500,000, you have access to that equity. If you sell it as well, you can get that equity as well. The bank, that is not the bank's, that is yours. And it can be used to refinance an existing mortgage. There's cases as well where you can even purchase another home. If you have enough equity to be able to do that, you can purchase a home through a reverse mortgage, and that's been possible as well.
Okay, thank you. So there are a couple more questions. Let's see. AAG is the best rated reverse mortgage program. Does it help to shop around? That is a really good question, Rhonda. I appreciate you bringing that up. Let me just make sure and clarify. So the reverse mortgages that the credit union offers, we offer through a third-party company that we've teamed up with. We've done some research and we're very confident, and we enjoy working with them. It's been a really great relationship. The company that we work with is First Reverse. I know that there are quite a few that advertise that they do reverse mortgages, but in the end, there are really only about 3 or 4 nationwide companies that they all funnel to. And so I'm always a big advocate for shopping around. What we're trying to do is we're trying to help you answer questions that are associated with a reverse mortgage and make sure if you do have questions, we're here to answer those questions and help you through that. And certainly shopping around is one of them. If you get something from another company and you want help kind of navigating through that and answering questions, we're here to help you. And if we can help you find the best deal. And if that's with someone else, we're good with that too. We just want to make sure that we give you the very best information that we possibly can. So hopefully that'll help.
One of the processes we provide to you as members of the credit union is we can show you on paper different scenarios of how this would be. And if you can compare that to another company, and that does not cost you anything. There's no cost to be able to do an analysis on your reverse mortgage request.
Yeah, which is that's a nice option to not have to. Okay, how can I use my funds? I think we've covered this. You can totally use the funds any way you want. If you want to pay off an existing mortgage and consolidate debt and put all of that into one thing on a reverse mortgage, absolutely. As long as we can get you the loan amount that you need and that it's within the guidelines of a reverse mortgage. That is a tongue twister. Sorry, I got kind of stuck there. It doesn't matter what you use it on. We've seen people use them for weddings. We've seen people use them for vacations. We've seen, and we've seen people that have just used them simply to pay off the small balance on their mortgage and
everyday living expenses.
Yeah. We've seen repairs on homes where people have had to do repairs on homes and they haven't been able to afford a payment on those that the reverse has been able to. So, and that's what we're going to go is we're going to go forward on example 1, and Dawn's going to go over this example with you and just kind of give you an idea of this was one of our actual members.
This actually was something we did a reverse mortgage for.
But we changed their names.
Names do not apply here, but ages do. So Jim 74 and Barb 72 are looking for a mortgage option. So they came in and saying, hey, we just want to refinance our traditional mortgage. We need to lower our payment. But they currently have a first mortgage with a balance of about $54,000. And it was on a 15-year mortgage, and their payment with taxes and insurance was $1,370 a month. They recently had to get their roof replaced and a new HVA system, heating and air conditioning system. They took out a home equity credit line for $20,000. Other debts included an automobile loan for $32,000 and a $12,000 line or a credit card. So their total monthly debt is as follows: the mortgage $1,370, the home equity credit line $200, auto payment or an auto loan $400, credit card $300, and so that totaled $2,270. Now their income, Jim and Barb had multiple sources of income, both collected Social Security, 1911 and 632. Both of them had pensions while they worked. So Jim receives an additional $432 and Barb $375. So in essence, they had about $3,700 in income to pay their $2,200 or $2,270 debts. But additional from that, that's just off of the current debts that they owe money on. But there's always additional living expenses: auto insurance, $78 a month; food, you got to continue to eat, $283 a month.
Dang it.
Food outside the home, another $170. Like they like to go out and eat. Fuel for their vehicle, $125 a month. Utilities, almost $300, and charitable contributions. So another additional, and instead of the $2,270, they had an additional $1,325. Now that may vary for everybody, but that only left them about $100 in additional discretionary income, and they could eat out more. So that's something that they could do. So they looked at different things. They thought, well, let's first talk about extending this 15-year mortgage out to a 30-year mortgage and continue to make a payment on that. So their payment went from $1,370 a month to $835 a month with their combined income. So that was a little bit better. That left them about $1,000 a month in discretionary income that they could use. And so they felt decent about that. But the great loan officer said, hey, wait a minute, I've got another option. I've got a reverse mortgage. So they looked at the reverse mortgage. Again, they would continue to have the payment, what was it, about $275 a month for taxes and insurance on the home. That would continue because you've got a budget for that, whether you pay that, save that monthly, or they have, or do that a savings account each month. So you still have your additional income, or your income of $33.53 a month, but now you do away with any kind of a mortgage payment, and now instead of $1,000 a month, you've got $2,000 a month of discretionary income that you can have, and you can enjoy yourself. Maybe you can do other things with that money, but so that reverse mortgage would really help out, especially dropping, either $1,300 a month or about $800 a month in a mortgage payment. You don't have to do that. So again, a reverse mortgage may not be needed by everybody, but it is, an option to what you have. Some people really maybe can't survive without doing a reverse mortgage. Other people would just live more comfortably if they had a reverse mortgage.
Yeah. I love this, how on that situation with Jim and Barb, how they were able to, they just didn't, finances weren't an issue every single month anymore. It kind of took that out of it. So that was example number one. Example number two is somewhat similar to that situation. So Lee and Mary currently live in a home in Sandy. Yes, they actually lived in a home in Sandy. They sold it, but they built the home in 1978, and it was a split entry. There was lots of stairs, and they were getting concerned about that. And their children had moved away to Sugar House, long ways away. But they also took their grandbabies with them, and they really wanted to be closer to where their grandbabies were. And so they really started looking at homes. They decided that they were going to go ahead and sell their home. They were looking at selling their home for $385,000, and the new homes that they were looking at were around $450,000. And they realized that after everything was all said and done, that they were still going to be short the amount that they needed to buy a new home. And so they figured that they would just borrow a small amount, $90,000, and move into a new home. Well, their income was $2,800 and no other debt. And so really they had, quite a bit that they felt like they could work with. And so they came and talked to us. And Mary, the first comment that Mary said was, we want to do a 10-year mortgage, and we don't want to pay any fees, and we want this to just be paid off in 10 years. And so they selected the 10-year. We ran the numbers. Their payment was going to be $1,180, and that was with $248 of taxes and insurance on this new home. They really were not prepared with how expensive the taxes and insurance were going to be, and she was quite surprised. And so she explained to us that her goal was to keep their payment at $500 a month. We calculated out the payments on a 30-year mortgage, and the lowest that we could get the payment was $844. And she basically looked at her husband and said, we can't afford this home. And they were really upset and really discouraged. When we went through the other options, the option of a reverse mortgage came up, and went ahead and presented to them that would allow them to move into the home, pay for their taxes and insurance, which is $248 a month. And then they had questions. They were concerned about a lot of the myths and misconceptions that we've already covered with you. And we also met with their kids and answered some of those myths and misconceptions. And they decided that moving forward, they were excited about the option of being closer to their grandchildren and their children. And everybody was on board. And so they moved into their home with a reverse mortgage to pay for the balance. And now their monthly amount is not only manageable, but now they're not concerned on a monthly basis. They are able to focus on their relationship with their kids and their grandkids. And I know that we focus a lot on what the result is, but that's really what's important about this. This is a tool that's available to you to utilize to help the overall, your overall financial well-being. And it may not work for you, but it might. And in these scenarios, these were life-changing events for these couples. They were able to accomplish something financially that they really didn't know for sure that they would be able to. And if they just had access to a traditional mortgage, they wouldn't have been able to do it. So what does the process look like, Don?
So this is a form that we have in the office, and it's just something that we talk over the phone, and I ask a few questions. I say, who's on the home? Who's vested on the home? What are your dates? What are your birth dates? And again, that's one of the most important things, because everybody has to be 62. And what type of a home is it? What are your estimation of what it's worth? And then what do you owe on that home if there's a mortgage on it? Is it a single family home? Is it a condo? Is it in a trust? These certain questions. And then we send that off to First Reverse, and they give us within 24 hours an analysis, about a 45-page analysis of what happens. There's a lot of definitions of a reverse mortgage, a lot more explanation of what a reverse mortgage is, but there's some papers in there that there's the sheets that talk about, there's 4 different scenarios. This is the interest rate for this. If you have a line of credit, it tells you what the closing costs are going to be. It tells you what you're available for the mortgage. Once you pay off your mortgage, what's available to you on a line of credit if you want it. And it's just a simple form. And again, this is what is free to you to do. It does not cost you anything to have us do this analysis on your reverse mortgage. You can sit down with that. We can discuss it with you and go through and show you all the details. It even has a form that says, you know, with anticipated appreciation rates of your home in 10 years, if you borrow $100,000 on your reverse mortgage, what the balance is going to be in 10 years, in 15 years, and then in 20 years. And also an assumption of what your home is going to be worth at those same periods of time. So you can see what your remaining equity would be as well in those homes. So it's really informational to you, and it allows you to discuss it with your heirs, with your children, what the process looks like. Once you agree to, and this isn't even an application, once you decide to proceed with that, then the application comes into play. And you go through a counseling session with a counselor, a HUD counselor, Housing and Urban Development, that makes sure that you understand what a reverse mortgage is and how it impacts you. So there's some information that you're going to just be overloaded with information on the reverse mortgage. It's not something that somebody's going to come in and say this is a great deal, and you're not going to be uninformed of what happens. So there's a lot of process in this. The whole process, it's not a quick process either because of these different steps. They want to make sure that you're fully knowledgeable on what the reverse mortgage is. And then at that point, once the application is made, we're gonna ask for additional information, income information. We're gonna see what kind of income that you have. Those kind of questions will be asked at that point. And then the appraisal will be ordered if you want to proceed. So that's the process, what it looks like. It's an easy process for you to do, basically to get information to make sure you want to proceed with this or not.
Okay, you addressed so many of the great questions, and we have a few more questions that I'm going to ask you. What if I have a current HELOC on my home? Can I keep that?
No, it's actually called, what is it, a home equity conversion mortgage. That's the official name of a reverse mortgage. Conversion mortgage kind of implies a reverse because it's a reverse process. That is the only loan you can have on your home. So you would pay off an existing first mortgage, an existing second mortgage on that. So you will not have access to a home equity credit line after the fact either. You cannot come in behind a reverse mortgage and do a home equity credit line either. They prevent you from doing that. But they also, you know, to counteract that, they have the ability for you to access equity in your home after that. But you have to pay off any lien against it. It has to be a first lien on the home.
So you mentioned earlier about townhomes or condos or single families. Does it matter what type of home I live in? What if I live in a condo? Do condos qualify for this?
Condos qualify for this. The only additional cost you're going to have is you need to maintain your HOA dues as well as your taxes and insurance. But no, it does not matter. You can do this on a condo, a townhome, a single family home.
Okay, and my last question is there any age limit?
The only age limit in this is you have to be 62 years of age. But other than that, there is no age limit on that. You know, you can't be too old to get a reverse mortgage, but you can be too young to get a reverse mortgage. So you need to be
kind of a nice thing.
you need to be 62.
Okay. As you can tell, there's lots of questions. We just tried to scratch the surface, and so we would just really encourage you to reach out to us. You know where the website is because y'all found us for this, but if you would like to contact us direct, this 884-81-8840 is the mortgage line. You can reach a mortgage consultant, and these are the three specialists, Marky Johnson, Taylor Riley, and then Don Taylor on the end is the one that joined me today. But reach out to Don and ask questions. We are here to help you. We're here to provide you with information, and hopefully this has been beneficial for you today. We'll give you about another 20-30 seconds to ask any last minute questions. And if not, if you don't have any questions, thank you so much for joining us and enjoy the rest of your afternoon. But we'll be here for about another few seconds.
but please, any other questions? We'd love to talk to you. These are great products. Again, it is one of many products that we offer. So there are other options, but this is a great option for some people. And hopefully it can relieve a financial burden if necessary.
So one of the questions, I know one of the questions that we had earlier today, and we didn't really talk about it in detail, was what are the different things that, how can you do a reverse mortgage? You can do a lump sum payout, you can do a monthly, you can take a monthly amount.
Or a line of credit. So
or a line of credit.
Yeah,
Okay,
or a combination of several. Pay off your current mortgage as well as receiving a monthly payment to offset and increase your income monthly, give you monthly income as well to live. So each one is separate. Again, the biggest thing with that is how much equity do you have in your home and does it qualify to work with? Exactly.
Cool. All right, you guys, thank you so very much. Enjoy your afternoon. Thanks for joining us. And just a reminder again, you'll get a copy of this in your email, a copy of the recorded webinar, and go back and refer to that or reach out to us and let us help.